The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi folks, Basil Chapman here. This is the Tiger Technicians Hour, and my service is the opening call daily newsletter. Dow's down 195 at 40,637. The reason why I didn't want to do any adding to our long position in the Dow is that this is a very critical moment because the 9-period moving average is getting narrower and narrower, closer to the 14-period moving average. If it slips under it, it'll go pink. And that'll say, oops, that's a confirmation of the sell signal. Now we've got to see if there's not a sell mode. We haven't got that stage yet. If you're looking at the Dow going from 38,499 the 5th of August to the 29th of August at 41,585, that is, I mean, that's really a 3,000 point. That's a fabulous move to the upside. And now we are digesting the gains. Yes, I did have no choice. I had to call that a peak D there. I have the phantom peak B. I've spoken about that a number of times. Most importantly, what we're looking at is the confirmation that the YM, that's the futures, did go to a peak C1, C2, and that represents a potential peak D. We're always looking at D as the fourth highest peak in the Chapman wave to go from an upgrade buy signal to a buy mode, and your target then is at least 4 higher peaks. Peak D is the fourth. A is the first, B is the second, C is the third, D is the fourth, and you can go up to E, F, and G. You never have an H. Now, what's really important is that, as we're talking, the YM has just flipped to an S with the 9-period moving average going under the 14. I'm not disregarding that we are in this big digestive phase. It's going to take time. I think a majority of price might have been made. That's not the point, because if you go to the S&P, look, here is the ES. This is the futures. No matter how I count it, that's gone to a C. There aren't any parallel highs. Even that one right there couldn't really be counted. So if you go to the S&P, that's different. The S&P did go to a peak C1, C2. That's a legitimate one, the Chapman wave methodology. And that says we're in a digestive phase. If you go to the QQQ, and let me go back there, because you remember the Groucho Marx eyebrows? Most people don't even know who Groucho Marx was. In fact, I didn't watch much Groucho Marx, but it's the eyebrows. That was, I don't remember which Marx brothers had these thick eyebrows and the nose. So he's got eyebrow, nose, eyebrow, and that would be a nice caricature of Groucho. I think it was Groucho. And there's a double top potential in the weekly. You got that in the daily. You've got 56, 69, 67 as the high, all-time high on the 16th of July. Yep, 16th of July in the S&P, slams down to 5119.26, just above the 200-period moving average on the 5th of August, screams up and just doesn't make that previous high. It gets to 18 points away from it and makes a double top. That says there's still residual strength, but you've got the 9-period moving average weak, and the price is pulling back under it. So that makes the next, I'm saying we're in a digestive phase. Maybe the upside's fairly limited. I'm saying that I think at this particular point, just from the patterns that I'm looking at, that the downside, that low in August, I don't think we're going there, but I think we can go down a little bit more, maybe to the 53.70s as a possibility. Let's go to the QQQ. And the QQQ failed miserably. It tried to get to the all-time high of 503.52 made on the 10th of July, plummets to 423.25, rallies to, I think it was a 60% level, then failed at a peak B, and now it's coming down. I don't like failures under the previous high. You've just got to be careful, because this could be, I haven't drawn it in, but I will very soon, could be arching over, or at some point, for whatever reason, there's a sudden up spike. Look at that. Falling axe formation, or it's fighting with the arch, the dreaded H pattern. Okay. And you can see that's very much the case here in the weekly chart. And the weekly chart is one thing, but the monthly chart has gone to the third highest peak, peak C. The implication is that there should be a leg D in 2024. And if the Qs go up, I think the other indices will go up as well. So I'm still bullish longer term, intermediate term, I should say. Let's go to the IWM, lagging, down $1.50 at 207. Yeah, this is making a lower low than 3 days ago. This is not acting very well. We're all long. We've raised our stop. We've taken a little bit off, and we've raised our stop so that we don't get stopped out for a loss. But this stalled where it should not have stalled. It stalled at Chapman Wave inside wedge target repellent zone. That's a peak C. I could have made that a C1, C2, but what I had said is it had pulled back a little bit too much to be able to legitimately, in the Chapman Wave methodology, go C1, C2. It's got that characteristic, but most importantly, I don't want to see this as a peak C failure. A C failure sees that not only do you pull back in an arch formation like this, but you can, in fact, if you break certain level of support, you can, in fact, go all the way back to make a Janet H and retest, in this case, the 196.60 low that was made back on August the 5th. And here we are, 10 points, 20 points higher. 10 points higher. Yeah. And there's this pattern that I call in the weekly chart. You want to see this rally very soon. The 9 is still strong. That's the reason why I've tried to be patient and stuck with a long position in the IWM as we have in the Dow. But I don't, and 9 is still very good in the weekly and still very good in the monthly chart. That's why I'm saying I think this is more a digestive phase. Let's go on. I want to go quickly to the gold. Gold is holding okay. It's up 1. It's just in this narrow sideways trading band. Silver's not that good. Silver is making lower lows and lower highs. 200-period moving average at 28.18 is going to be tested soon. We're at 28.43, down 22. It's got a high-grade copper. High-grade copper is just, look at this. Red candle, green candle, red candle, green candle, red candle. Is there going to be a green candle tomorrow? This is a cluster formation. I don't want to see a cluster formation take out the low, and that means at 4.042 on the continuous contract. Better not be tested because I think it'll be taken out. Let's go on. We want to go to bonds. Let's go to the TLT. The TLT now is up 21 cents at 100.21. I do believe it's going to go to a leg D above the high that was made 3 sessions ago, and that's the 6th of September had a high of 100.78. I think it'll go to 179 or higher. If it does it this week, it extends leg D in the weekly chart. That'll be a good sign. There we are. Okay, and this particular pattern that we're looking at here, think of this as an inverted head and shoulders, number 1. So here's your left side shoulder, S. Here's the head, H. Here's your right side shoulder. Neckline is still quite a way up, but most importantly, it's almost forming. I'm not going to say it is, but it's almost forming a cup formation or a bowl formation. If it hangs out a little bit too long sideways, that doesn't work. But at this particular point, it is. And I believe it's going to go to a leg B in the monthly chart if we can go 1 penny above the 100.57 level. And so far, it's gone on. Leg B, we saw leg B in the monthly chart. That's a good sign for yields. I'll be right back. Basil Chapman, Tiger Ignitions Hour.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, for Dennis that saw me typing this in just before I gave the news, I had shown that the 1 minute chart had made a peak F at 5501.25. There was a cup formation, and then there was another cup formation. That's like a soft W with lower lows and lower highs. And that usually says, oops, be careful. If you take out the left side low, it could go deeper. The 5 minute chart made a peak F. I didn't put a down arrow on the 10 minute chart because I was just about to do the news, but that was a warning. So we had this top, and what happened? It slumped right through the 200-period moving average of 54.79 in the 5 minute chart and 54.74 in the 10 minute chart. So so that just says a chunk of the early morning till 10:20 rally. Look, green 9-period moving average, beautiful turnaround at 6. I think when was it? It was before 7. I remember we had the right there, turned positive, and now it's very close to turning pink in the 10-minute chart. It has in the 5, but not yet in the 10-minute chart. And 54.88 is the 200-period moving average in the 1 minute chart. And that could become a little magnet line, try to bounce there, then pull back and mess around between highs and lows over that 54.88 level. If it's able to rally above 54.83 right in the next couple of, I'd say 10 minutes. And you were getting closer to the 10:20. Yep, 10:20. So now the second part of the session, it's actually really it's already the third part of the session this morning is about to take place. And now the real players come in and they say, okay, messed around, let's see what's going on, what's working. So now let's see what's working. So I've got a whole bunch of things I want to go through here. I've written them down, questions that I had. So let me do this. I'll start with the den questions first. Nike, Inc. B shares, sport and sportswear, making lower lows and lower highs, did a dreaded H in the monthly chart. 82.22 was the October 22 low. It made a big arch, and over the last 4 months, it's been taking that out. It did close above it last month, but now it's back under it. And it's on the 200-period moving average in the monthly chart, but the technicals are still very weak. The let me do this. I'll open it up so you can see it. Nike keeps making these arch formations, beautiful left side, right side price, time match, and then breaks down. Then a rectangle breaks down. I would suggest to you that at 78.20 down $1.29 today, I'll do this live. So you see this left side low that was made back in, I think it was October of 2022. So I'm just going to draw this across like this. Now, this is a chart that I cannot get wrong. It's impossible to get wrong because it's live and it's historic. The price has already been made. Normally, when I'm looking at an arch like this, first of all, I would, by that cup formation right there, I draw left side, right side, price, time match. I don't want to take the time to do it right now, but I do want to do this. I want to show you that low that was made back in October of 2021 at 82.22. And this is a really interesting thing, Dan. I know that you do quite a bit for the Chapman wave. This is a technique that I developed a long time ago, and it's going to be reintroduced now. I haven't spoken about it for a little while. I've done the left side, right side price time matches many times, but you see this arch formation, and you can see the smaller one, beautiful left side, right side with a smaller arch. It looks like an H that goes to a lowercase r, another arch, so it goes to a lowercase m, lowercase h, lowercase m, and then even a lowercase rectangle that you could even call a mini arch formation. Now you see the speed is quicker and quicker, and you see the speed here is quicker and quicker. So I'm just going to say to you, if this time Nike takes out the left side low, and it's almost a double bottom low of 71.24 in July, as a weekly chart, July the 19th, and 70.91. I'm going to type that in. 70.91 following month, so 70.91. If it takes it out in September, in other words, this is the candle, as it had a sharp up candle. Look at that. You see the big red candles? When it starts to, when it's showing debilitation, that it just hasn't got the strength to hold again, you've got to be very careful, because if it takes 70.91 out, it could very quickly do a 1-to-1 to the downside, and that would take the target, I'm doing it visually right now, down to the low 60s. Now, that's the negative side. What's happening, because it's getting each consolidation, this one was a huge one. It took a year. This one took less than a year, about 8 months. This one's taken way less. If you're looking at it in terms of acceleration, then what you have to say is, I have to look at the shorter term. And the shorter term, and this is going to be really interesting with Nike. You see that gap? It could not fill the gap. We've spoken about this before, that if it gets into the gap, that's a really positive thing. But it really has no choice but to scream above. It would have to go way above the 200 period moving average of 90.95. It could still do this sometime in the next 6 to 8 months, but it's just getting harder and harder. There's something's not right in this particular stock. Something is not right in their sales. I mean, that's just the way it looks right now. So I'm just suggesting to you, this candle right here is a really important candle. The candle of the 13th of August with a high of 79. Let's call it a round number, 79, and a low of 75. Right there. So if 75 gets taken out in the daily chart, you have to consider that there's a dreaded H pattern happening. There is some strength in the MACD. It's not expanding as wide. It is wide, but it's nothing as the histogram is slowly going down. It's not like over here. That's different. So I'm just saying to you, the upside at this particular point, it has to be some kind of, I don't know when the next earnings is, it has to be some kind of a surprise that takes it. It will be a surprise because right now it's making lower lows and lower highs. It has to get above this candle right here, the candle of the 3rd of September, 82.94. Wow, that's 4 or 5 points higher. I don't know what's going to do it, but if it can do that, that says, whew, stalled, and now it can go in a sideways pattern. But those are the parameters. But I think you're right about looking at lower lows and lower highs. Next question came in. 61 is the one I was looking at. You're looking at 60. We don't have to go there yet. Next question, Zip wanted to know about Uber. Now, this has been on my buy list for a little while. But because we didn't get it down here, we were so busy getting other things that it worked out quite nicely. I just said, all right, we'll have to leave it. But look, this is a peak C right here on the 26th of August at 74.48. It pulls back and then it goes to 74.46. So that's just a perfect example of a Chapman wave peak C1, peak C2, and right now it's in a sell signal, not yet a sell mode. I'll be right. Daily chart.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
So, PSU is 1 minute chart. It went right to the 200 period moving average, just stalling a moment right there. We'll see if it has strength to continue sneezing coming up. 1, 2, 3. Whoops, got rid of that. 5 minute chart, leg A. Didn't get rid of that. This is the 10 minute chart that peaked deep, plummeted down to the 200 period moving average. Use that as a springboard. Poof, it's gone up, and it's almost hitting the 54.88 200 period moving average. Okay, just wanted I like to do this live because you can see that there's a viable technique. And what I like to say is that if you have a technique and you're interested in some of the work that I do and you're following it, or you can look at, if you're a subscriber, you go to my webinar. I've got webinars on all these different techniques. Then you could add it, and then it must become yours. It's not mine anymore. It becomes yours. That's what I like very much about teaching, because and educating. It just gives you you're teaching how to fish. So going AM was mentioned. I just want to get back to AM from the other day. You see how it's stalling at that peak D? That's how important these Ds can be, Ds or Es. And look how it's pulling back lower lows and lower highs. This is Agnico Eagle. So you need to wait for this to kind of resolve. The 74s is really important support. Let's go back to, we were looking at Uber. I forgot to mention the Tiger was looking at calls. That's okay. I don't know when the calls are for. Did you tell me? No, you didn't. Oh, if they're very close by, that's a problem. Calls, huh? Ooh. October 70. Okay, that's fine. October 70 calls, and we're at 68. Okay, that's fine. Because you've got time. October calls, if you're talking about monthly calls, you're talking about October the 18th. You've got plenty of time, at least for the scenario that I'm outlining right now. What you want to see is if it goes further, that 65 level is where the 200 period moving average before, even though it's gone below, became a springboard. It became also kind of a midpoint, going up and down. But more importantly, the 9 period moving average has gone negative in the daily chart. The weekly chart is very close, but it hasn't. And it's been positive for about 5 sessions, 5 weeks. Not good enough. I want to see it. Remember, I drew this in and I said, we're looking at it for subscribers, because I think as a leader in the field, I always like to look at stocks that are potentially in an area where they've locked in maybe leadership or some kind of priority. And Uber is that right now. So yes, it's taken months since it made that little double top high in the low 80s, and it plummeted down to the 55 area. Now it's come back. So this is a big digestion phase, but the digestion phase with its falling exclamation cannot last much longer, because it's just going to start stalling, and then all the daily and weekly 9 period moving averages will be pink. That monthly chart is still really positive. So I'm looking at it this way. If you've got time, let's talk time rather than price. Time says that by about September, we're now September the 10th. Let's go to between the 20th and the 23rd. I want a full week of price of Uber above 75. If it can do that, a full week, that means the Friday close has to be above 75, and it's at 68. That's not a big deal for a stock like Uber, but the weight of evidence says that it's starting to make lower lows and lower highs. So that's what I'm saying. Now, what I'm going to suggest to you is right now you must just be out the money. You were in the money, and now you're probably a little bit out the money. Now, maybe a little bit more than a little bit out the money. You're actually awkwardly out the money enough to say, do I sell now at a bit of a loss, or do I hold it waiting for it to bounce? If you've got enough, I'm going to say take something off right now, because you remember Dave White used to say, sell when you can, not when you have to, just because it's making low lows and low highs. And what I would do is I try to add that back if there is a bounce, and it can go anywhere close to 70. From here, if it goes back to 70 and closes just above 70 one or two times, I think that 9 period moving average goes back to green, and you want a green 9 period moving average. So I'm just saying, in money management terms, since you're dealing with options, and you've got calls with an S, I'm going to say, money, you don't have to do it today. I would do it if today's low is 68.01. If it starts to go into the 67, 70 area, I definitely take off something because the next level is 65.82, the 200-period moving average, key support. I hope that helps you. And we'll follow it. Keep reminding me, and we'll follow it every other day or so. But right now, I'm just suggesting you can keep that money designated to calls for Uber, but take something off, and that money goes back again. And obviously, you're going to have to buy less because you've got a little bit less. But it shouldn't be that much less. All right. Hope that helps. Next question. Okay, now I've got a bunch of questions that I've got that I need to get to from others. And I just need to see. Okay, good. So I wrote it down. Did that. Yeah, I just wanted to show you the XRT. XRT is the S&P. This is a SPY, the S&P retail. It has Amazon in it, but Amazon is not 20% of what it is in the RTH, which is this is the S&P retail fund, and the Van Eck retail or SPDR. Van Eck retail ETF has Amazon and Amazon's 20%, and you can see by the chart it has an Amazon-looking chart. So RTX is telling us about the retail scenario. RTX, I didn't mean to go to RTX, that's Raytheon. If only the RTX was the symbol for the XRT. Little mix-up there, little Scrabble. Let's go into peak F in the Raytheon chart. This is different. This is making lower lows and lower highs. It is in a digestive phase, kind of like an arch, but really I would love to call it just a rectangle that it can go above and it go below, but it keeps coming back into the rectangle. And it's a peak C1, C2 in the SPDR retail fund. So I'm just suggesting this is telling us a lot about the economy. There's a slowing down. That's what it's saying right now. It's not saying, oh my God, it's slowing down. It's just saying there's a slowdown. That's what the chart's saying. It's under the 200-period moving average. So I want you to do that. I wanted to do that, but the other thing that I needed to do was a peak B, then a T. Oh, B, X. Yes, okay. So Blackstone Inc. Financial, I was asked the other day about when you make a peak B and then you pull back sharply and you get to a D under it, what does it mean? I'll talk about that. When we return, Dow's down 213, S&P's up 3. Be right back. Mixed market.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the US futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust. The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, so we're back, and what we're looking at here is, I was looking at, I have to go back now to see what it was. So the question was, if there is a peak D under a previous peak B, what gets priority? Well, if you remember correctly, well, first of all, let me show you. I'm looking at Blackstone Inc. made a high at 149.78 in November of 2021 at a peak C, and then it plummeted down to 71.72. But the starting point was way, way, way back down here at about 27 in 2018. So that's still active. But under it, it had a peak A, peak B, peak C, peak D, peak E, and then a spiral to the upside, peak F, but under the 149.78. That gets priority. There's no more a C. This is now the new notation, Chapman wave notation, peak F. Yes, that's sitting there. It's lurking. It's locking. It's doing laughing. It's doing whatever it is because everything came back to where it was. But the fact is that it's done very well, and now you have to do the technicals are still strong. The weekly chart made a peak C after a Chapman wave restart. This is that restart that I talk about where it goes sharp. It comes off a bottom, but then it keeps testing. It keeps not breaking out, but it keeps, and it has a peak A, and then a B, and then another one, an A and a B, and then an A and a B, and an A, and finally goes to a C. That C usually says, watch out, you're going to go to a D. So that's very bullish on Blackstone, which is in 139.72. And if you look at the peak D that was made under the last one, it's like a mirror image. In the daily chart, the high that was made in July at about 145, pulled back sharply, and now you've got peak A, peak B, peak C, peak D, and you've got a potential falling axe formation right there. And we're going to watch to see if Blackstone's able to break above that high that was made on the 3rd or something, the 30th, August 30th at 142.69. Next question was humor. Humor is Humacyte Inc., bioengineered human tissue. I remember reading about this now. Elo, I don't know if you were the one that brought it up or it showed up in my screamer list, but I have been notating it, and it made a falling axe formation at a peak D. Remember how important Ds are? In the daily chart, almost it's a pyramid rather than the Eiffel Tower. The last one was an Eiffel Tower. That was back in at about 10, back in early June or end of May, and made a cup formation, retested under that previous high peak D, and now it's come back. This is just stuck in a range. Now, what's fascinating, since I've been discussing peak C1, C2 for the last 2 weeks, week and a half, look, this did a peak C1 and a C2 with those two highs that were made, and here we go. It's even though in Chapman wave parlance, that high of 997 the week of the 31st of May, and the high of the week of the 2nd of August at 979, that's 5 cents. Those are the pennies that I talk about, giving it a peak C1, all the technicals start to fail. So this is saying I'm now under the 200 period moving average. I'd be careful. This is one of those where, because of the moves that it makes, I would have looked at it and said, wow, this looks like a biotech. Look at those long-legged monthly charts that keep fading. So what I am saying to you is that I'd be careful. Put it on your list as a watch like I have. Do I even have this in my watch list, ABCH? No, I don't. I know at one point I did, and then I took it off because it was starting to fail. But this is a single-digit stock, $5.20 down 19. I'd have to wait. What I would tell you is give me a yell when it makes a V shape or a cup shape formation, turn around, and you've got two good green candles. Give me a yell and we'll look at it again. Preferably those candles are above 567, which is the pink 9-period moving average. So, okay, next question came in HMY for Tiger, Tiger YouTube. Don't forget, we will not be here tomorrow because the TFNN is moving studios. And because they're moving studios, everything's shut down. I'll be doing my newsletter. Everyone will do whatever newsletters that they're doing. But there will be no live show. There'll be a pre-recorded show, I guess. Now, could this have been a G/C? Absolutely. Harmony Gold, South African gold miner, G/C, and then that C has failed because it's taking out the left side lows. Yeah, so that's where you have to look at it and say, where does the Chapman wave fail? I wouldn't call it a fail. It just uses another part of the plan, and you have to be aware of it, that because there's this cup formation and it went to the previous high and it was still in a C, it should have gone to a D. But that gap to a tiny plus sign doji candle, look like that's a doji candle, with another doji, with a side Chapman wave silent doji, and then gapping down, that's usually a sign to say, whoa, be careful here. So it has pulled back. A 9-period moving average is weak. And what did it say? Harmony is down over 20% from the highs. Is this a great buy at the low of last month's consolidation? I'm saying to you, it's getting close to a buy. If you're a long-term buy and hold, you've got to consider that it's a peak E in the weekly chart. It's a peak E in the monthly chart. And gold itself is holding well. But, oops, I showed it just now. But look at the GDX. Oops, I keep typing on the chart. Look at the GDX. Look, I want gold miners to lead. I don't like gold to lead. And the miners fail. That's not right. That means that the gold miners are not making money, I think. That's the way I'm looking at it. It's just a Middle East hedge. It's a security blanket, having gold. So all I'm saying is GDX has started to pull back sharply. What's the one that people say is, AEM, I think I just did that. Yeah, AEM is pulling back from a peak C, and I said, I'm going to watch this really closely for that monthly chart because Agnico Eagle, there it is, that has the characteristic right here that it could become a peak. It can't be an F/G, but that could be an instant restart, and that becomes E/A, F/B, G/C, D, E, because you can't go to H, and that could be an E. I'm watching this very closely because Agnico Eagle is one of the really fine gold companies, trading at 77.64. Yeah, so I'm just saying be a little careful. Whoa, one more break to come in. I didn't finish all the notes that I've made. Let's see if I can do that in the next segment. Yeah, okay, yeah, I'll be able to sum it up. I'll be back in a moment. I'm just thinking this is a digestive day, waiting for the debate after a spectacular session yesterday. Digestive session. I'll be right back.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Baseball, I'll get back to you on Thursday with that whole thing with the GDX that you asked about. But what I will say right now is NEO went right to the daily 200 period moving average of 560, and it's now just pulled back a little bit. That's the Chinese EV company. This is still the one that has the best chance of succeeding because they have government backing, Chinese backing. That's number one. Number two is, I want you to go to the debate tonight. Remember, it's all about looks. I mentioned when the switch from Biden to Harris was announced, I said, watch the press. It'll take them no more than 3 days to have her go from one of the lowest rated presidents, just on a percentage basis, vice presidents, to up and maybe even higher than Biden. And that's going to be, you watch that because the press is the most powerful thing. And I'm saying for tonight, she needs to mix the smile with serious look, and she needs one really strong zinger at Trump so that it could be replayed 1 million times over in the next 3 days. Trump has to soften things up. He's in the old school. It's done. You're different. It's a different time. You have to lighten up. You have to look different. You can't keep frowning. You've got to be serious, and then you've got to be able to maybe crack a joke or something like that that's not personal. I'm just giving advice, free advice. Okay, got nothing to do with politics tonight. It has to do with the look, and then it becomes politics. For when we're not here tomorrow, we'll talk about it on Thursday. So with that, I'm going to hand you to Steve Rhodes. Great programming here all day today. And check out my opening call, my daily newsletter. I just think it's a digestive day, waiting for the results tonight so that the market get back to focusing on. You remember, a market is always it always has frustration. It's always uncertain. It gets very nervous when there's uncertainty about uncertainty. Hey, have a great day, and I'll see you a little later on with Tom, and have a good day.